markets have been a bit of a consolidation zone. That's been the case for the last couple of days. And today the implied open is suggesting another downtick to start the day with. So after that Freaky Friday move, Monday was mundane, there was topsy-turvy Tuesday, and let's see whether we have a wobbly Wednesday at our hands today or not. But for now, we're expected to open around that 24,300 mark as far as GIFT Nifty is concerned. Indian markets were on the back foot for the second straight day yesterday. The broader indices also collapsed a bit. Otherwise, we were seeing the outperformance from broader markets, but yesterday that was not the case. There was pretty much short build-up which was happening across the board. That's what our experts are telling us. So there is a bit of a short build-up both in terms of Nifty and Bank Nifty. And we did see some of the financials come under pressure. So whether it was the Shriram Finance, which was down 5%, or even other names from the broader markets, there was definite pressure on some of these names. In fact, all sectoral indices managed to end in the red. Nifty Metal, for instance, was in the red for third straight session, and key technical, resistance being broken as well. So Nifty slipped below the 50-day moving average. There has been that Reliance and HDFC, which have been a big drag on the markets as well. And all of this, at the end of the day, is visible when it comes to the FII data as well, Nikunj, because there was a solid sell figure of 6,000 crores yesterday. Not a major block deal to talk about, or not a specific trade, but overall a 6,000 crore sell figure yet again.
So Nisha, there is a why, there is a what, and there is a where now. The three W's, as you always say. So the why is easy to establish. Normally when you see this kind of a sell number, and it's not just cash, folks. Look at stock futures, look at stock options. That number now is a very fat number which came in terms of what the FI selling yesterday was. Now typically when you see this kind of a number, there has to be a reason. And yesterday there was no reason. Nothing on the global front, nothing on the local front. So was it just pure, plain, vanilla profit booking? Just when we thought that FIs are back and they were here to stay, you've got one big sell number, which in a sense is now the talking point this morning, that why the number yesterday, which normally happens when there is news, or it normally happens when there is a liquidity crunch in the world, or when there is something happening in the terms of macro, the dollar index or the interest rate or something in and around Fed, nothing. So yesterday's figure was pure, out of the blue, and it in a sense is a clear indication of profit booking, and I think that in a sense is the single reason why you fell yesterday. What is important? And then we'll talk about the where. So have we peaked out for the year? Which is the Santa Claus rally which everyone thought, will that be elusive this year? Which is that in the next 2 weeks of market action, 8-10 trading sessions are still left. Are we likely to, have we really paused out? That's the what here. And where I think is the most important thing, Nisha, and where I think we are headed. I don't think we are headed in a linear decline. I don't think we will see a big fall. And the reason why I feel that we are unlikely to see a big fall in the next couple of days is because there is no news. Fed would be a no event. And if this selling continues, which is a big if, I think market will settle down. So I would read yesterday's market action as a typical action of a bad day of trade. However, Anisha, if this selling multiplies, then the back of not the large cap but the small cap would be broken. How it works is, large cap will start the decline, and if the decline rolls up, then the precipitating fall will always be in small and mid cap stocks, because that's where the real gold rush has been in last 2 weeks. So for me, the watchword I think is the breadth. But I'm not too bearish, because you are hitting what could be called as a news vacuum. Almost all news is out of the system. And from next week, FIs are going to be going on a Christmas holiday. We may be working, but they're going on a holiday, which means that this kind of selling is unlikely to continue.
Yeah, I guess the last major event of this year which is lined up is of course the Fed meeting, which everyone is watching out for. Yes, 25 basis point might be factored in of a cut coming in from the US Fed, but I think what will be more important to track is the commentary for next year, because this time the dot plot will be out. So the projections with respect to inflation, with respect to growth, with respect to further rate cuts in 2025, that would be the single biggest factor to really watch out for. If I have it right, for now they're penciling in 4 cuts in 2025. Is there going to be a slower rate cut cycle? Is it going to be much shallower? That is something that the street wants to know, and all of that is something that we'll get to know end of day today as far as Indian time is concerned, and tomorrow morning is when we'll react to that. And just ahead of that event, we have seen a bit of a sluggishness across the board in the US markets as well. The US futures have been wobbly of late. We have seen that the Dow was down 260 points. In fact, it's the 9-day losing streak that index has seen. In fact, the longest selling streak since 1978. So can't take it lightly anymore, because this is something which is breaking the charts over a long period of time. So the last time we saw 9 consecutive day of decline in Dow was in 1978, and this is despite the fact that S&P as well as the Nasdaq continue to be close to record highs. So it's a broader kind of markets for them, which is also which is the headline there. Nvidia continues to fall deeper, of course. Dollar index is something which has been very sticky, so it's perked up a bit. It's not going above 107 as well, but continues to be fairly elevated between that 106.8 to 107 marks. We're watching out for that as well. Asia this morning has opened on the weaker side. There is that big move happening on Honda Nissan as well, because there are talks of a potential merger between the two, which has the street excited. So we do have those stocks reacting quite positively. Nissan was up 22% after the report surfaced. But Nikunj, I think it's about the dollar index, which continues to be on the higher side. So we haven't seen a big reprieve there. Maybe for a couple of days it had come down to 105, 106 levels, but it's back again 107.
But it's not going and making a new high. With this kind of setup where rupee is weak and global yields are still very firm and they're very stubborn, it's not the dollar index has gone through the roof. For me, I think the talking point here is that Dow's down, Nasdaq is up. Is it magnificent 7? Is it only, it is only about US tech? Well, that seems to be the case. And typically I've seen that at the end of the year, like, Stanley Druckenmiller would always say that the outperforming trades always tend to become the go-to trades in the last 1 month of any calendar year, because that's where performance will always attract money and money will always chase performance. So the fact that Nasdaq is outperforming in India has done rather well. I think it's a sheer indication of how the entire financial markets are aligning. And so I will not read too much into this underperformance in Dow, but the fact that Nasdaq is outperforming is a clear indication of which way the global financial markets really are in terms of a mood point before it's curtains down for 2025. Eddie Ardini joins.
If you like this video, then like, share and subscribe to ET Now.